Hi there, welcome to Kneppy Invest. We have just stepped our way into April, one of my favorite months of the year. And hopefully, you did not fall for any jokes on April the 1st, or otherwise, you might have looked like a fool. So, why is April one of my favorite months of the year? Not the favorite, that belongs to August and February, but it does come in at equal third spot alongside July, October, in January. So, what do those 4 months have in common? It is quarterly reporting month, not only in Australia, but also United States. So, what does that mean? There are many companies on the ASX that are not profitable, and many of those companies do not generate any cash in their operations. And those are the sort of companies that are required by the ASX to release a quarterly cash flow report every 3 months. We call it an Appendix 5B for mining companies and an Appendix 4C for non-mining companies. Now, most other mining companies that are cash flow, are in production, that sort of thing, also release quarterly activities report, but they don't release a cash flow report. So you might see those activity reports from BHP, Fortescue, all those big miners being released this month. I also have a glance through look at those particular reports, but I don't really focus on the numbers because there's not many numbers in those reports. So I'm only looking for those reports that have a quarterly cash flow report, Appendix 5B or 4C. So in today's video, I'm going to show you 5 companies I own that I'll be watching this quarterly reporting month. And I'll do another video on 5 companies I don't own that I will be watching this particular month. So look out for that video, which might be released in the next few days after April the 1st. And what I'm going to do in this particular video is count down, not the show, but count down from number 5 all the way to number 1. And this is a bit of a giveaway what's going to come into number 1 if you know anything about this company and the violent reaction the market has when this company releases their quarterly report. Now, the next thing I should say is there's no certainty this company will actually release an Appendix 4C this quarter. In fact, that is also true for 2 other companies on this list because all 3 companies have had 4 consecutive quarters of positive operating cash flow. And sometimes when a company does achieve that particular goal, they are no longer required by the ASX to release an Appendix 4C or 5B. Now, sometimes a company will announce that to the market, sometimes they won't. And if they don't, we get to the end of the month, and lo and behold, the company has not released an Appendix 4C. So that's nothing to be wary about. It's just that they just haven't announced that the ASX told them you don't have to release a quarterly report anymore. Now, the company that came in number 1 was sort of a no-brainer for me, but I did have to think about it for a second because there is a potential this company again might not release an Appendix 4C for this month. But just look at the violent reaction the market has when this company releases their Appendix 4C over the past 9 quarters. This is a 10-quarter history. So back in the September quarter, financial year 22, the share price went down 0.4%. Then the next 9 quarters, this is what happened to the share price of this particular company. Down 16%, down 22%, up 23%, down 22%, down 25%, up 42%, up 14%, down 16%. And in the most recent quarter that was released in January 2024, the share price rose 28%. I won't reveal this company until we get to number 1, but I do think there will be some viewers who know what this company is straight away, possibly even by the background, just near my head. Coming in at number 5, we have Pointerra. In fact, I had another company coming in at number 5, and then I realized that company is no longer releasing Appendix 4Cs. That was Telix Pharmaceuticals. Then I remembered, wait, they didn't release any Appendix 4C in January. And that's because they've had at least 4 quarters of positive operating cash flow. I think they have. Well, they must have had because they didn't release an Appendix 4C that I can remember. Well, not only that, I actually did have a look. Anyway, coming in number 5 is Pointerra, a company that has really disappointed the market over the past, say, 3 or 4 quarters. In fact, what I provided here is the cash receipts history of Pointerra all the way back to January 2018. And the growth was there all the way up to about 1 year ago. And really, the last 3 quarters have really disappointed the market, and the share price has taken a pretty big tumble. In fact, the tumble in the share price began about 2 years ago. So $782,000 of cash receipts in the June quarter last year rose to about $2 million in the October quarter, and then back to 1.3 million in the most recent December quarter. And I think what a lot of shareholders want to see is some return to growth in cash receipts. The company is hinting at that, just hinting at this stage, and I do know quite a few shareholders are a little bit disappointed in this company and a little bit fed up, maybe getting a little bit impatient in regards to Pointera. But I do think there is potential that this quarter could be quite good. And if it's not this quarter that is going to be quite good for Pointera, might be the next quarter. So maybe we need to be a little more patient with this company. But if we don't see another good quarter, or if we don't see a good quarter, not another one, just a good quarter from Pointera, the share price might struggle even further, even though the share price has fallen from like above 90 cents all the way down to just above 4 cents. So this is a very important quarter for Pointera and its management. Coming in at number 4 is Electro-Optic System, and this is one of those companies that has had 4 quarters of positive operating cash flow. So again, there is potential this company won't have to release an Appendix 4C for the March quarter. Hopefully they will, because we have seen a pretty significant turnaround in sentiment in this company, and that's because of a capital raising they just completed. Before the capital raising, the share price was in a beautiful uptrend. Sentiment was positive. They had plenty of cash. And a lot of thinking is, why are you doing a capital raising when you have $70 million of cash? Now, one of the reasons they might be doing a capital raising is because they need that money to fill or satisfy all the orders they have, which could be beneficial for the company in the medium to long term. The other thing to notice when you look at the cash receipts history is the last 2 quarters have been very good for this company. Not a record quarter, but the second best quarter and the third best quarter for Electro-Optic System. The best quarter this company had was way back in the December quarter 2019 when they had 141,000. This $141 million of receipts. This is in millions of dollars. So last quarter, $105 million. The previous to that, $96.8 million. And this company has been highly operating cash flow and free cash flow the last few quarters. So the main thing I want to see if this company releases Appendix 4C is continued momentum in the business. I'd love to see cash receipts get above 141 million. A record quarter would be great for this company and possibly will turn around the sentiment again. And even if it doesn't turn around the sentiment, maybe put a stop to this negative sentiment that is creeping into this company once again. Now, if the company disappoints the market, I could see Electro-Optic share price take a massive tumble. I could see it falling 20 or 30% if this particular quarter does not satisfy the market, particularly after that disappointing capital raising the company just did. Coming in number 3 is Playside, and this is another company that has had 3 or 4 quarters of positive operating cash flow. Sometimes a company, again, will release an announcement saying they've been relieved of reporting on a quarterly basis. A company did do that. What company was that I do own? They announced that to the market, and I was a little bit disappointed. I love these quarterly reports. I love to see how companies are performing every 3 quarters. And the reason that company gave was, well, ASX told them after 4 positive operating cash flow quarters, you don't have to provide any more quarterly reports. And then the company said, but still, we'll do quarterly updates again still. And that's Frontier Digital Ventures. Yeah, Frontier Digital Ventures. I actually did release an announcement to the market. Anyway, so coming in number 3 is Playside. And this company is on a tear, not only in terms of growth in cash receipts, revenue, gaining traction in all their work, but also in the share price. Share price is in a beautiful uptrend. Now, a really big increase in cash receipts from the September quarter to December quarter, almost double. And I think the market might be getting a little bit ahead of itself. And what I could envisage happening, Playside releases their quarter results, March quarter results, and cash receipts are significantly down from 23 million. And the market has a little bit of a hissy fit. He's disappointed with the cash receipts in this particular quarter. But you just got to remember that cash receipts or revenue really can't, or it's really hard for any company to grow in a straight line up. There's going to be some quarters that disappoint. And you can see back in the March quarter 2022, receipts grew by almost triple from 5.5 million to 14.8 million, and then fell back down to 5.4 million. But overall, receipts have been climbing since 2021. And if this company can prove that this growth in receipts in the past quarter was just not a one-off, and maybe even grow from the previous quarter, I think that would be really good and justify what the market is thinking about this company and justify the positive sentiment around Playside Studios. Coming in at number 2, we have DroneShield. Now, I'm pretty sure this company will release an Appendix 4C this particular quarter because about 3 or 4 quarters ago, this company was not operating cash flow positive. Now, the share price of this company has been quite volatile over the past few months. There's a few reasons behind that. And one of the reasons the market became really interested in this company is because of their spectacular December quarter results. Cash receipts grew from 7.7 million to 47.9 million. Now, I don't think the market believes or even thinks, and this is the market being really rational, that DroneShield will deliver another quarter just like that one. I think the market is aware that that was not exactly a one-off, but I don't think the market is expecting such a good quarter, because if they give the market this sort of quarter again, and then again the next quarter, this company is significantly undervalued where it is. Now, we sort of saw this growth in receipts from one quarter to the next back in 2021. From the March quarter to the June quarter of that particular year, receipts grew from 1.7 million to 7.4 million, and then fell all the way back to 1.7 million in the September quarter. I don't think that's going to happen this quarter. I would expect, and am expecting, just like the market, a significant decrease in cash receipts. That's to be expected for this company that is growing at a fairly quick rate. But if receipts beats my expectations, if receipts beats the market expectations, I think we might see continued volatility in the share price. And don't be surprised if the share price pops up if that actually happens, because one of the reasons share price has been volatile is because the directors of this company all sold a fair few shares, and that sort of convinced some participants in the market that the directors know something bad is happening to this company, and they're piling out before that bad thing is announced to the market. It's not really how it works, and so that's why we've seen a little bit of volatility, but there has been enough demand for shares to stem the tide in DroneShield. Just have a look at the chart. You can see the share price take a plunge, and the share price is going back up right now, sort of back into a short-term uptrend. So that's another reason why I'm really fascinated to see what sort of numbers DroneShield has achieved for the March quarter, and it could go any way from here. And that amount of uncertainty actually excites me, just because I just don't know what's going to happen with DroneShield and the March quarter results. Okay, so let's go back to this little table for the company that is coming in at number 1, my most anticipated Appendix 4C for the March quarter. And there is a possibility we won't get one from this company because, again, they have been positive operating cash flow positive the last 4 quarters, maybe even the last 5 quarters. And again, the only reason this company is coming in number 1 is just because of how the market reacts when they release an Appendix 4C. So over the last 9 quarters, we've seen 5 negative reactions and 4 positive ones. And the most violent reaction was a positive 41.5% increase in the March quarter of last year. So 1 year ago. And that was a turnaround for this company. Share price at this point in time was in a downtrend. Share price, I think, had reached a low at this point. And this was the turnaround quarter for this company. And of course, this company is Megaport. Could have been anyone else but Megaport. And that has been probably one of the standout things about this company over the past 2 years is whenever this company releases an Appendix 4C, you're going to see a massive reaction from the market. And that sort of surprised me when you look at the cash receipts history. Now, before I talk about the cash receipts history, I just thought of this. I am trading Megaport right now, but there is a possibility that I might set out of my trading position in this company just for risk management reasons because of the violent reaction you typically see when Megaport releases their Appendix 4C. Now, it's just a possibility at this stage, just because I don't want to be holding a position in this company if they release an Appendix 4C that is not taken well by the market, and the share price might tumble 20% in 1 minute. Now, I don't understand why the market acts so violently to Megaport's Appendix 4C when you look at the Appendix at the cash receipts history, because generally cash receipts for Megaport move up in a fairly consistent way, apart from 2 quarters back in the financial year 2023, the first 2 quarters of that particular year, when cash receipts actually fell. But if you just ignore those 2 quarters, cash receipts moving up pretty consistently. So you could actually map out how the cash receipts of this company are going to turn out the next few quarters if you just look at the trend. And that is all I have for this video, looking at 5 companies that I own that I will be watching, waiting with anticipation for their March quarter results to be released. Are there any other companies that you own that you are waiting with eager anticipation for the March quarter results? There actually are quite a few other companies that I own that I know will release an Appendix 4C that I am waiting with eager anticipation, but I decided not to include those companies in this particular list, and maybe I should have. Maybe I should have left out Megaport, Playside Studios, and Electro Optics just because of that possibility they won't release a quarter results this particular month. Now, I'd love to hear your thoughts. What companies are you waiting for? So leave your companies in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.